So this is going to be the first episode of my crypto trading series. So I'm going to be teaching you crypto trading from the ground up. Okay, so this is actually going to be covering support and resistance levels, this lesson here. Support and resistance levels are probably the most fundamental aspect of trading. You can actually be a pretty profitable trader from literally just knowing how to read candlesticks and trading the bounces off of these levels. So we'll get into this later on the week. I'm going to be uploading more videos going into some strategies in more depth, but this is just to, I suppose, get my subscribers up on their feet. Support and resistance levels is where I'd start. So here we go. We get into this. I've made a slide, just a brief presentation, and these are some of the topics we're going to be discussing. So firstly, what is support and resistance? I'm going to be explaining candlesticks and just how to read them, identifying support and resistance levels, support and resistance flips, false breakouts. We're going to go over a live working example of Bitcoin on the 1 hour chart. So definitely stick around for that. I'm going to be showing how you actually apply support and resistance levels to trading and how you can actually profit from them. And then a brief introduction to range trading. That's all going to take place on the Bitcoin 1 hour chart. So stick around to the end of the video for that. But first, we'll just get into it. So what is support and resistance? Support and resistance is a concept showing that the movement of the price will tend to stop and reverse at certain predetermined price levels, okay? These levels are denoted by multiple touches of price without a breakthrough of the level, okay? So basically they're candlestick rejections, okay? So I'm going to get into what they are in a second. If this is going a little bit over your head, just wait a few minutes and it's all going to make sense, I promise. So first I need to show you how you read candlesticks, okay? So on the left we have a bullish candlestick, okay, so price going up. So say if you're reading the 1 hour chart, or we'll just take the daily chart for example. So you're on the Bitcoin daily chart. Each candlestick you see on the daily chart is going to represent one day, okay? So if we're just pretending that this is a candlestick from a daily chart, this is where the price opened, and this is where the price closed at the end of the day, okay? However, this is the highest point that the price reached during that day, and this is the lowest price that the price reached during that day, okay? And then for the bearish candlestick, it's pretty much the same, except it goes the other way. So obviously it's bearish, so price is going down. So at the start of the day, this is where the price opened, and this is where the price closed, okay? So it's different to the bullish candle in that sense. But this is where the lowest price was reached, and this is where the highest price was reached, okay? So I just needed to get that out of the way just so you have a little brief understanding of reading candlesticks and what their wicks mean. So these are the wicks, these points here, they're wicks, and this is the body. So these are the bodies and these are the wicks, okay? So now that you kind of know what the candlestick structure is all about, so this is what we're going to be referring to in the next point, candlestick rejections, okay? So we can see the price enter this range here. So we have a resistance level on top and a support level on the bottom. So the price enters this range, accumulates whatever, so the price enters this range, works its way up to this key resistance level. Now, this is our first wick rejection. Okay, so our first candlestick rejection here. If we're reading this candlestick, the price opened just here. Okay, the price was driven all the way up to this key resistance level by the bulls. Okay, but then the bears slammed the price back down, and the price closed here. Okay. Similarly on this candle, the price opened here. The bulls brought the price all the way up to this resistance level, but the bears brought it all the way back down and the price closed here, okay? So we are getting candlestick rejections, okay? So the resistance level is rejecting the price, which causes the price to bounce back down. And now we're getting the exact same just from the support level. So in this case, we've got the bears trying to bring the price down past this support level, but the bulls are having none of it and drive the price back up, okay? And the price closes here. And we get a bounce off this key support level, and the same thing continues again, more candlestick rejections, okay? So this is clearly a strong resistance level. Price does not want to cross this level. we get a bounce back down to a support level, and then finally the price breaks through, okay? So now that the price is above the resistance level, okay, that was previously keeping it below, now that the price has gone above that resistance level has now turned to support, because when the price is coming back down, it's going to bounce off that level. Okay, does that make sense? So when the price is below, it's resistance, 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 breaks resistance level, and is now turned support, okay? So this is just another example of a support resistance flip. We've got the price coming up, bouncing off the resistance level, coming back down, and then boom, breaks a resistance level, and now that resistance level is now a support level, okay? So support resistance breaks is the next topic I'm going to go over. So these support and resistance levels weaken with each touch, okay? So the price is dying to break these levels, and every time the price touches one of these levels, that level, that be it a support or resistance, becomes weaker, okay? So this is just kind of anecdotal. Don't take this as, definite data. This is just my kind of feel for the markets after trading, and also discussing to other traders support and resistance breaks. This is kind of the general sentiment, so that there's about an 80% chance of a breakout on the fourth touch of a support or resistance level. As I said, every time the price touches one of these levels, there's more probability of it breaking through on the next touch. So a good way to remember this is just thinking of, a lumberjack or whatever chopping down a tree. Every time he smashes the tree with his axe, the probability of the tree falling down on the next hit is going to be increased for every hit that occurs. Okay, so it's the same at price. As I said, every time price touches one of these levels, there's an increased probability that the next touch is going to be the touch that the level breaks, and the price goes above it. So this is just an example of a support and resistance level weakening. So in this case, it's actually the support level that gave out. So here we go. We've got a bounce off resistance, then bounce off the support, another bounce off the support, another bounce off the support, and then on the fourth bounce, the support level doesn't hold up, and we get a break through it, okay? Now, so how would you avoid false breakouts? So obviously, being able to identify these levels and then being able to trade their breakouts can be quite a successful strategy in itself. So if you are going to trade with, say, a resistance breakout, so when the price breaks a resistance, if you're going to trade that, you're going to want to watch out for false breakouts. So you can avoid false breakouts by waiting for the candle to close above the resistance level. Or if you're shorting, sorry now if I'm confusing any of you that don't know what shorting is, I'll get into this later. Basically, you're just betting for the price to fall. So if you're shorting, you'll be looking for the candle to close below the support level. But if you're going long, i.e. Basically hoping that the price will increase, you look for a candle to close above a resistance level, okay? So this is an example of some false breakouts. So here we've got the price comes up to key resistance. We're getting candlestick rejections. The bulls are trying to bring the price above resistance. They can't. The bears bring them back, like straight back down. We have another test of this key level. Okay, the bulls were successful in bringing the price above the resistance level in this case. However, the candlestick body did not close above the resistance level. Therefore, it's a false breakout. So you would not enter a trade here. If you entered a trade here to go long, the price would have just come back in to this range, and you would have lost that trade. Okay, you would have lost some money. Yeah, that's basically a false breakout. So you can also, support resistance levels don't always have to be horizontal. So as you can see in all the slides I've shown, they've just been horizontal levels. They don't always have to be horizontal. Okay, so what's happening here is this is the support level here. So we've got rejection, rejection, rejection. Price does not want to break below this support level. And then on top we have rejection and rejection, okay? So what's happening here is the resistance level is actually coming to meet the support level, okay? So this means that something is going to happen here. So, okay, something has to happen at this point. A big move is either going to happen. So either there's going to be a breakout or a breakdown. This is actually called a point of agreement. Okay, so right now at this very specific point in the market, the bulls and the bears are in agreement. Okay, the market is in equilibrium. Okay, so nobody's in control. They're in agreement. Okay, so something is going to happen, and it does. We get a breakout. The bulls win. Candle body closes above the resistance level, and we rally. So you would have gone long here. Now, how would you know if you're going to go long or if you're going to break down and go short? I'll get into them in different videos, other videos. Today we're just strictly looking at support and resistance. Okay. Yeah. So that's the end of my slide. Now we're going to go into a working example of this. So, no. Okay, so here we go. So this is what the chart would look like naked if you just opened up the 1 hour. However, just for the sake of this video and for the sake of time, I've identified support and resistance levels already, okay? And we're just going to follow the market along, and I'm going to point out, where you would maybe enter a long position, where you'd maybe enter a short position, and why the price will say fail to break through each of the levels, or why the price did break through each of the levels, okay? So I just want you to kind of get inside my mind a little bit here. So let's go. Let's work from left to right, obviously. So the price is coming down here. We get a bounce off the support level, okay? So therefore, bounce off of this key support level. Price works its way up. We have a wick rejection here. So as I said, massive volume spike here. Bulls trying to bring the price above this resistance level. They can't. The bears bring it straight back down, okay? So that's 1 touch, 2 touch, 3 touch, okay? So this is a strong resistance level, okay? Now, I'll explain what the RSI is probably in a video to itself, but just to give you a little brief introduction, when this line works its way up above this point here, the market is extremely overbought. So when something is overbought, okay, you can expect a pullback, okay? So think of markets as elastic bands, okay? If the market goes, this direction, a drastic amount, it'll have to come back down and meet back here somewhere. And similarly, if the price falls a lot drastically, it's going to be pulled back and meet back here, okay? So the market's constantly like an elastic band being pulled on either side, and eventually it has to come back. So think of the RSI as that. So the price is becoming overbought significantly, so you can expect a pullback, which is what happens. Price comes down here and actually breaks this support level, okay? So now, this is now a resistance level, okay? So price can't get above it, we're just trading below it. Now here we go. The RSI is picking back up, okay? So there's momentum building back up in favor of the bulls, okay? As we can see, these candlesticks are massive. They're very tall in comparison to their predecessors. So there's a volume spike here, okay? Overbought, coming back into the overbought area on the RSI. So the bulls are in control at the moment. However, they can't break this resistance in this case, okay? Resistance level. So we see rejection here, another rejection, okay? And then on the 5th attempt, the bulls finally break above this resistance level, okay? Now, because this was such a strong resistance level, you can play this as a trade here. So you can be pretty certain to an extent, okay, that you're going to get a bounce off this support level because it was such a strong resistance level previously, okay? So if you were to, we say, take this trade here based on, your inkling that we're going to get a bounce off it, what you would have done is you would have gone long here on that wick rejection. Your stop loss would have been set just under the support level in case of a false breakout. You didn't want your trade to close, so that's where you would have set your stop loss, and that's where you would have taken your profit. So this would have been a 4.59% return on equity, which is, a decent size trade. If you're trading with 1,000, or even if you're trading with, 10,000 or whatever, it's a decent size trade. So this would have actually been a swing trade. So you would have entered it on the 4th of July. And Actually, no, this would have been, yeah, it just would have been a really, really long day trade. Okay, so that would have been one trade that you could have gone long on. Okay, so we just continue following the market. So I probably wouldn't have entered any trade here because the RSI is quite neutral. Okay, so if we're looking at the RSI here, it's neutral territory here. It's around the 50 mark. Wouldn't have entered a trade here. Now, here's where I'd be eyeing up my next trade. So again, we have a volume spike in favor of the bulls and a wick rejection. Now we're extremely overbought on the RSI. You can see here. So the RSI is at 75.23, which is quite overbought. So as I said, think of the markets as an elastic band. If something becomes overbought, you can expect a pullback, okay? So what we're looking for here is confluence, okay? So we want at least 2 or more signs, to enter your trade. So in this case, we've got the RSI being overbought, and we have a massive wick rejection from a key resistance level. Okay, so we know that something is going to happen. We're going to get a pullback. We're going to get a bounce off this level, and we're going to get a pullback. So I would have entered a short position here. Would have entered a short position. We'll just say roughly here. Would have put my stop loss just above the resistance level. And your initial target would be the support level here. That would be your initial target, okay? However, when we play out this trade, okay, you want to leave your profits run, but you want to cut your losses as soon as possible, but you want to leave your profits run. So I wouldn't have taken profits just at this support level. I would have waited to see, do we get a breakthrough or do we get, a bounce back here, okay? So as we can see, we actually broke through this support level. So you would have stayed in this trade, okay? Sorry there, I moved the wrong thing. So we would have stayed in this trade. And you could have potentially ridden this trade or rode this trade all the way down here, okay? So that's actually, sorry now for all the pop-ups. That's actually a 9.83% return on equity. So yeah, about 10%. So if you're trading with $1,000, that's 100 quid, pretty handy. And this would have been, this would have been a swing trade. You would have been in this trade for about a day and a half, as we're on the 1 hour chart. But as you can see, literally just from support and resistance and being able to identify where the price is going to bounce, you can be quite profitable, okay? So price breaks below here. And then, as I said, this support level is now resistance. We get rejections, and then so on. And then the market finally breaks out of this range. Okay, so this is range trading, when the price bounces between two levels like this. Now we finally break out of this range, and then you could argue that we're now in a trending market, okay? So the market's now trending again. So that was just a brief introduction to range trading using support and resistance, okay? I'm going to do, you could do a completely separate video on the RSI, there's a lot to go into there. Just to give an example of what you could actually, what I'll be speaking about in one of my RSI videos is there's support and resistance levels on the RSI as well. So another thing that I would have been looking at here was this level right here, for example, is actually a very strong RSI support. So we have a bounce here, a bounce here, a bounce here, okay? So that's 3 bounces on the RSI. So when the price was approaching this support level, I also would have been looking at the RSI, and if the RSI broke this support, then I would have extended my short position, okay? And then I would have exited the short position when I see some bullish divergences coming back into the market. So you could have entered, you could have closed your short if you're going off of the RSI. You would have closed your short about here. So there's higher lows forming on the RSI. Okay, so that's a bullish divergence, and that's probably where you would have gotten out. So you would have gotten out about here at, so just an 8% trade. Okay, so that's how you know how to get back out. Obviously, the market then dipped again, but just to be certain, this is where I would have gotten out. Now, I don't want to confuse you, just that's for another videos, but that's just kind of like a brief introduction of what we're going to be going over in the coming videos. So yeah, if this video helped at all, just leave a like, comment, and subscribe. It just helps my channel grow on YouTube's algorithm. So yeah, I'm not too sure what the next video is going to be on. Maybe price action or candlestick patterns or something like that. I'll see. But yeah, so stick around for this, because if you just follow what I'm teaching you here, your trading is going to increase, a lot, because I'm going to be going over pieces of information that I've gotten from courses, that I've gotten from, forums, from traders online, from my own experiences. So I'm really putting everything together here and just trying to give it to you in a nice little crash course, okay, just to get you up on your feet. So yeah, thanks for watching the video, and probably see you during the week.